What is a bubble? The dictionary meaning of the word bubble is a good or fortunate situation that is isolated from reality and unlikely to last. This applies to situations in the real economic world as well. A bubble, in the financial world context, is an economic cycle where prices of assets rise rapidly, followed by a sudden and severe fall. Typically, a bubble is created due to rising asset prices caused by exuberant behavior by market participants. The price of the asset gets detached from its fundamental value. People are mostly gripped by the fear of missing out on the opportunity of making money, especially when they see people around profiting from the rapidly rising prices of assets. Bubbles can form in any asset classes: stock, bonds, currencies, etc. In recent times, the two most famous examples of bubbles have been the dot-com bubble of the late 90s and the real estate price bubble in the US from 2004 to 2006. The dot-com bubble was characterized by enormous rise in the price of stocks of technology and internet companies. Investors started to grossly overestimate the profit-making ability of these new age internet companies, resulting in a buying frenzy in the stocks of these companies. The technology-dominant NASDAQ index rose over 5 times, from under 1,000 in 1995 to more than 5,000 by the year 2000. The dot-com bubble finally burst in 2000 and 2001. The crash resulted in the NASDAQ falling from its high of 5,048 to 1,139 in October 2002, a staggering fall of 77%. Similarly, the real estate bubble in the early 2000s in the US was a period of rapidly rising house prices, aided by the prevailing low mortgage interest rates. People with no access to steady incomes and low credit scores were also able to buy multiple houses, causing house prices to skyrocket. The housing bubble in the US finally crashed in 2007 and 2008, resulting in the great financial crisis for the entire world. Bubbles are hard to spot when they are being formed, and hindsight is always 20/20. However, there is a bubble episode in history which is even more absurd. In the mid-1600s, Holland was gripped by the tulip mania when the prices of tulip bulbs traded as high as 6 times the average person's annual salary.